While the economy rests between a war and ever-changing financial conditions, right now a lot of people are looking towards Fed rates. And what are they telling us? Well, the odds of a September Fed rate hike has actually plunged from 58% down to 36%. Why is that? Because of the recent jobs report, and we will go through that in depth. On top of that, oil has been going down for this particular week, but when you have news events such as Iran demanding a lot of different things to come towards a peace deal, you can see that there is a lot of tension in this America-Iran war. Combine that with things such as copper versus gold losing strength and gold and silver itself showing a lot of strength. S&P 500 moving towards linear resistance, Russell setting all-time highs, and finally our favorite risk asset, Bitcoin, coiling up in this descending wedge pattern with news regarding the Clarity Act, the liquidation heat map showing us an interesting story about liquidity building downwards, and other countries adopting Bitcoin and what this would mean for the general crypto markets or so. All of this we'll discuss in this week's session, so tune in. Hello, everyone, and welcome to Strategic Markets, your place for technical and fundamental analysis all at once across many markets. Now, into our end of week session, it has been a reasonably interesting week. So, when we look over here, Brent Crude, we discussed this from the 50% has gone down, is actually now coming into this section of the Fibonacci. And although that's pretty good, and seeing weakness in oil is generally good for the economy because that means inflation fears go away, there is a little bit of tense situations that has occurred over this particular week. Iran has officially made its demands to fully reopen the Strait, and they've said they want to lift the naval blockade and sanctions on Iran, withdraw U.S. military from the region, pay war reparations, release frozen assets, and end attacks on allies. So it does not look like the straits are going to open anytime soon. And watching oil tomorrow is going to be a priority of ours. With that, we do actually have some news coming in from Fed-related hikes. Odds of a September Fed rate hike has plunged from 58% to 36%. So these are your online betting markets and where people put money where their mouth is. And Kalshi has dropped to 36%, which is really good. I had a chat with AI as to why that might be the case. Recently, America has actually shed about 23,000 non-farm payroll jobs in July, versus what economists were expecting of roughly 80,000 gained for the amount of jobs. And at the same time, prior months for May and June were also revised lower by a combined 103,000 jobs. Also, the unemployment rate edged down to 4.1%, which generally would be a good thing, but in this case, it was largely because labor force participation declined as more people left the workforce. So because the labor market is looking very fragile, Fed is not taking the Fed might not take the risk of hiking rates and therefore keep them where they're at. So even from the Fed Watch tool perspective, you can see right now more faith has gone back to keeping the rates where they are as compared to going down. So we'll keep track of this as we progress closer, because right now the rates meeting is not still for another 38 days, but definitely something interesting for you to know as these tides shift. And my opinion stands. I personally don't think we will have any rate hikes this particular year, but obviously I'm open to being proven wrong. And one of my theses was that we are having expansion in the PMI. We're having copper versus gold show us a lot of strength. Recently, though, copper versus gold has actually shown some weakness. Okay, so copper generally being stronger than gold would signal that we are moving towards more manufacturing, we're moving towards more jobs, we're moving towards more growth in the economy, but it's dropped below the 200-week SMA, which I was actually looking towards for strength for quite a bit, and I was thinking this is going to be good for risk assets because of this move that gold has made recently. So gold on the weekly actually had a massive strong breakout from this descending wedge pattern and is coming towards there's different moving averages over here. And although this is really great, it does bring into a question as to how strong the manufacturing growth of America will happen from here onwards out. It's definitely something to keep an eye out. But yes, this is a really strong breakout, and I'd want to see a cross on the MACD over here as well, followed in the next couple of weeks or so, which likely should come closer as this particular week closes and the next week starts. Definitely some interesting events there. Silver is looking like it's following the route. It's following through with what gold actions are and could see some strength to move towards these yellow and green moving averages. So if your trading strategy is towards looking to these breakouts and possibly longing the markets over here, obviously I'm not a financial advisor and this is not financial advice, but I personally might look at doing that just because of the upside for gold being somewhat less than 30% and silver being somewhat about 70% upside over here. Just a disclosure of what I might be looking at doing, but yeah, especially if the MACD follows through and you've got a decent volume profile as well. And you can see over here on the RSI, we're also breaking above these moving average itself over here. So see it through as how you would want to see it and the risk that you would want to take over there. S&P 500 though, we can see over here, it also had a strong breakout. Similar to gold and silver's price action is testing this linear resistance over here that we have held for a while. So if we break above this and come back for support, I've been saying that for weeks, that's going to be very interesting. And I believe that's when we get into AI bubble territory kind of thing. The markets can stay more insane than we can stay sane ourselves. So our sanity can definitely be tested over here if the S&P 500 breaks above this linear resistance. Because when you put up the logarithmic chart, from a logarithmic chart perspective, we still can move up over here for growth, and that would be somewhere about the 8,400 level. So that's definitely something of interest to know. But yeah, right now, as we are testing this linear resistance over here, this is going to be very interesting to see how we go, and a lot of news media outlets will cover that. So keep that in mind. Great news for the Russell as well. Russell making its highest weekly close as well. This is particularly a good risk signal because you've got mid-cap businesses showing strength with their performance as well, as we have been getting recent PMI data show strength as well. How does this correlate with our favorite risk asset? Well, look, Bitcoin, as I covered last week on the linear graph, was making this descending wedge pattern and is coming towards a testing point over here, okay? So we are coming between this 200-week SMA and then over here, this resistance line that has been over 6 to 8 months. So if we break above this, I'm hoping that similar, because Bitcoin's considered digital gold, it could have similar price action to gold, and we actually could move upwards. But my hopes do not define this particular market, so we look towards data. And right now, from a data perspective, when we look at the liquidation heat map, we can actually see there's a lot of liquidity for Bitcoin, especially from a trade perspective over here, just at 60K before we have anything upwards. So on this right side, you can see that the liquidation leverage for accumulation for shorts is 7.8 billion, whereas below is about 4.5 billion. But not to it's highly likely that we can come down and take this liquidity before we move up. So keep out for news events next week. Anything bearish, we could be prepared to take on a upwards price action, but I am open to bearish price action, especially if the war continues on and this brings fear for people from the recent news events that I've showed. And another sad news that follows through for crypto is that the Clarity Act got delayed again. Bummer, yes. Was it something that we expected? It's been getting delayed since Feb. We've been hearing since January, Feb, Clarity Act's going to pass, market structure bill is going to pass, and it just hasn't. So in this particular case, as we keep moving on, at least the good news is that there has been a filing for closure on the Clarity Act to be on the September 15th. So that basically means a vote to progress the Clarity Act in the Senate for further discussions to pass it and process it for America. So that would be really good news, and at least that's some progress. But yeah, definitely delayed progress and really sad to see on America's part when you have Russia now legalizing Bitcoin and crypto trading too. This came on a little bit earlier on the week, and I was just sitting there and I'm like, man, what needs to happen for America to do this? Because you've got now Russia, Taiwan, Japan, all these different countries, bringing in clarity for crypto assets. You even have Dubai, which has now approved Bitcoin for salary payments. Like, this is absolutely insane, guys. One of the leaders in money markets are actually taking their sweet time to progress such important legislation for financial infrastructure growth. And then you just have other countries just absolutely speed running them on this. So very refreshing to see these particular news events and companies. But following through with the next best asset for crypto being Ethereum. What I like about Ethereum is I discussed this earlier on this week. We have come on this particular triangular pattern and we have come back inside it. Now, at the start of the week, Ethereum was being a little bit dramatic and was just testing this particular line. Didn't look like it was wanting to move up, but over the week, it has moved up on this 1900 level. Finally, even after the Clarity Act was confirmed that it was not going to progress ahead for a clear vote this week, we still kept moving up. So meaning that most likely sellers are losing some strength in the market and we are going towards more in hope or now that we have closure. So keep that as an eye out as well as the week progresses for crypto assets because at least there's some progression, right? Even though it is coming through in September. So I could definitely see narratives going either or, but the war narrative, if it progresses further as well, in the short term, there could be some downside. So keep an eye out on that. And similar for the Ethereum Bitcoin ratio, that one is currently just trading sideways, which means altcoins and risk bets are currently not being taken. So that is updates across many markets fundamentally. Now let's have a look to see where Steve's at with his analysis.
Refreshing or frustrating? Would probably be what you're basically thinking. That is just absolutely unreal. I think Eleanor Terrett, that person who keeps on talking about the Clarity Act, has really said it quite a while back. And I remember the first time you actually introduced her as well, she basically was saying, Clarity Act, never going to happen. That was the exact quote that she had written a long, long time ago. And it just seems as though it's just been keeping on rolling over in that exact way, hasn't it? It's just absolutely unbelievable. And we just seem to keep on having this rolling and rolling and rolling and rolling. And I think the first time you introduced Eleanor was back probably around about June or even May. And it's just unreal how this just keeps on going. But let's have a look through in terms of, say, like those charts a little bit more in depth. And I'll bring up one most important chart right now. You alluded to this, and it's precious metals. They are the ones that have really moved, but it's not really a surprise because we've been talking about this over the last week and a half, and they were actually just starting to make a little bit of a move, and now, bang, they have really gone off and done their own thing. I'll bring that chart up right now as we speak. So here you go. This is gold in particular. And we were talking about this around about a week and a half ago. We really confirmed it earlier in the week when we were seeing this lagging indicator here in terms of gold crossing over the Tenkan-Sen, being this blue line right here. As it was crossing over this line here, you could really see the strength of gold coming through and really confirming the move. Now, overall, in relation to this, when you start seeing these kind of moves happening on the Ichimoku curve on the left-hand side, that gives you further confirmation as to what's going on. We were also seeing it on the right-hand side in terms of this quarterly VWAP being the pink line starting to curl upwards as well. Now, we were actually potentially starting to see this kind of thing moving as well a little bit earlier, probably around about a couple of weeks ago, but it wasn't enough at that point in time to really say that the move was happening because we weren't seeing higher highs and higher lows at that point. But we were starting to see higher highs and higher lows starting to form around about this area right here. And that was right at the end of July, confirmed when all of these other moving averages started curling up as well. So that's when we were starting to say it about a week ago. And everyone might have been looking at it and going, yeah, you're dreaming. But no, actually, as soon as you're starting to actually see a higher high forming there on top of everything else, that's where things were actually going. And that's when we were starting to see these higher highs forming as well with the higher lows on the lagging indicator. So we had all of these confirmatory aspects coming through and moving through. And then, as you can see, further respect of the moving averages as well, complementing what we were seeing on the Ichimoku curve there as well on the left-hand side. And sure enough, everything else came through. On top of that as well, you also saw this Tenkan-Sen blue line here crossing over the baseline being the red line as well for further confirmation as well. And you can go back to the previous videos as well and check that out too. And we were actually mentioning that there as well. Now, if we compare that to silver, with silver, we saw that crossover of the Tenkan-sen over the baseline a little bit later on. And on top of that as well, we've only just now got the crossover of the lagging indicator above that Tenkan-sen blue line only recently in terms of a day or two ago. So even going back to the previous videos as well, you will clearly hear a mention that gold has actually had more relative strength compared to silver. So it's the reason why we're only just seeing silver starting to now cross over the 50-day moving average compared to the fact that gold itself had actually crossed over the 50-day moving average more earlier, in comparison to silver. We'll go back to gold and you can see that. You can see that 50-day moving average right here. That was crossed over on Wednesday of the week overall. So things have happened a lot earlier for gold, and as soon as it crossed over there, you can see how big that green candle was as well, and it really just moved things along quite nicely. On top of that as well, you can actually now see we've actually been testing a prior support resistance line, which was acting as resistance beforehand from back in October. Now we're going to be starting to see that as acting as a support level. Will it hold as support? That's the big question, especially since we've now got the 100-day moving average here above the price action in terms of gold as being a test area at this stage. So expect a little bit of congestion to begin with, and then we'll see whether or not we actually just blast right past this, or if we start going a bit sideways here as well, especially after such a parabolic move over the last couple of days. So that's a big thing in terms of precious metals. Now, this correlates really, really well with the mere fact that we've actually had copper versus gold, like Yash just said a few moments ago, coming down in the recent time. Because we've had such a big move in gold, but copper in itself, which I'll show right now as well, actually having come down over the last couple of days. So with copper coming down, gold going up, that explains the reason why overall we've actually had copper versus gold coming back down over the last couple of days. So you've got that kind of situation going on. What does that mean for the overall markets? Does that basically mean that we're actually going to have a pullback coming through? Potentially, because overall we've actually got copper versus gold coming down, and that is usually a reflection as to what goes on in terms of technology stocks and those kind of things there too. Could happen. Not necessarily, but it could happen. And we've also got iron ore as well whilst we're here as well. It seems to be having a bit of a recovery overall, but it's could potentially be confounded by the short-term moving averages as well. So keep an eye on that as well. Now, let's go and have a quick look at the indices while we're at it, and then we'll come back to Bitcoin and Ethereum after that as well too. So if we take a look at the indices, there's been an interesting thing that's happened with the indices overall. Now, Yash has mentioned this. We've basically had all-time highs, especially in the Russell. Should look at the Russell first. So we'll take a look at the Russell. That reached all-time highs during the week. In particular, it reached it on Wednesday, came back a little bit, and it's just gone back upwards towards those all-time highs again towards the end of the week. So we've had some strength there in terms of the Russell. The Dow, pretty similar kind of movements there as well, all-time highs in particular on the Wednesday, and then it's come back a little bit as well towards the end of the week. What else do we have? We have the SPY. SPY, very similar kind of movements, all-time highs on Wednesday, come back a little bit towards the end of the week, and then we had the Qs as well. Now, the Qs are relatively weak compared to the other three indices. You can see that as well too. Now, the reason why I'm highlighting this in particular in terms of the Qs is overall we've got that copper versus gold story, and we can potentially be having a little bit more weakness in particular overall because of the technology aspects being a little bit weaker in general. Now, one thing you may notice from all of these graphs overall is we are far away from these short-term moving averages. And I really, really want to highlight that. The fact that we are far away from them could potentially mean that we could have a pullback in the near future to come back towards these short-term moving averages at some stage. Also on top of that as well, what can happen after you have a big parabolic move like we've had over the past week and a half? We can generally go sideways for a while as well until the short-term moving averages catch up. So there's a couple of scenarios that can be at play. If these price action just keeps on going upwards and upwards and upwards, then the higher likelihood of that pullback just increases even more so. Things will not generally just keep on going up and up and up and up and up and going crazy all the time. And you can see that they actually happen back over here as well. You will see that things, as they go upwards, they will generally tend to come back towards those short-term moving averages. It just generally happens. Even after this big extended run that we had, even back over here, that is the kind of thing that generally happens. It comes back towards the mean. It basically comes back to the moving averages. It may go for a prolonged period of time at certain things there, but it will come back to the moving average at some stage. Things cool off. The markets tend to cool off and come back at some point. It's just one of those things. These type of things will basically do that kind of thing because otherwise it just gets too hot, so to speak. There's just a way of basically thinking about things that you can't keep on getting overheated too far. Otherwise, things just go absolutely crazy. So expect at some stage, especially when you have a very high angle of these short-term moving averages, that things will come down and settle down at some stage. So keep an eye out for that. Now, with that being said, let's now take a look at something that has not moved at all, even whilst Yas was away on holiday for a while, and that is what we're talking about in terms of the crypto market. Now, we've got a little bit, and I mean a little bit of movement going on with it over the last few days in particular, in terms of, say, Bitcoin and also with Ethereum too. But is it enough to be able to say, write home about it and say, we've got a lot to actually be able to consider? Not really. Okay, and the reason why I say that is because there's not really all that much movement going on that's convincing at this point. I'll show you the reason why I'm saying that. It may look good on the right-hand side in terms of the fact that we're actually above the short-term moving averages and we're respecting the VWAP quite nicely there as well, and also respecting this 50-day moving average. Things are looking pretty decent in terms of the way things are all going. But the big concerning factor that we really do have here is the fact that this baseline is still above this 10%. And with that, we really, really don't have any conviction that we've got a strong trend to the positive side moving on here at this point. You really want to be seeing the 10% blue line above the baseline before you can say we've got positivity going in terms of this. Now, the lagging indicator itself is not really clearing itself above any of the unit price either, and that's another big aspect overall. Now, one thing we've been seeing as well for quite some time is that Ethereum has had some relative strength over Bitcoin for a while. Yash mentioned that in his presentation as well too. They had been going a little bit weaker in recent times as well too. Now, a big thing we're also noticing in particular is we've actually broken above the 100-day moving average here for Ethereum. And that's a good positive sign. I like that. I like seeing that in terms of some positivity. I also like seeing the fact that we're actually respecting some of these short-term moving averages here as well. However, there is one concerning factor that I'm actually seeing in terms of the Ichimoku curve here as well. And it's the mere fact that our baseline, being our red line, has actually now crossed above the 10%. That is indicating some potential weakness in relation to the overall trend. So be very, very mindful of that and be very, very cautious. However, corroborating that as well too is the fact that our lagging indicator is still above all of the unit price action, although it's starting to get a little bit congested amongst it as well now too. So just be mindful of all of these things that are going on. We'd need to have some real clearance and real guidance by the indications that we've got some more movement going on in the upward direction. However, if we take a look fundamentally at everything the way Yash had actually spoken about all of this, we have lost clarity, so to speak, because of the fact that the Clarity Act has not actually passed and all of those kind of things there, which is what everyone was waiting on. So let's rename Clarity Act to the Blinding Act really at this point until we know exactly what the heck is going on. Because really, like Eleanor was actually saying throughout all of this, there may be the situation where this is not going to pass and who the heck knows what's going on over the next month or so. So we'll wait and see what does happen. Now, in terms of everything else that's going on in the world, the last thing we'll cover before we move on with everything as well too is basically what the circumstance is with Brent Crude. So what is going on overall with that? Well, really, when I left you last time when we were discussing this was on Wednesday, where Brent Crude itself had actually settled down beneath this volume profile area over here. It had come back down here and was testing the 200-day moving average at that point in time. Interestingly enough, we've actually bounced from that point and are now actually testing the volume profile areas yet again after we've been testing the short-term moving averages. So when I was saying before that we can actually extend ourselves away from moving averages in terms of the indices before, it can also happen when we go the other way. And this is what exactly has happened in relation to Brent Crude. We actually extended away from the moving averages to the downside. And now we're actually bouncing backwards and testing and reverting back to the mean from downside upwards to the short-term moving averages there. It's exactly what's happened. We've come right back to the moving averages right now after being a long, long way away from them. So we're back up to exactly where they are, and we've tested them again. And now we're testing, once again, the volume profile areas from back in 2023. So we're in no man's land area at this point in time. But like Yash mentioned before in his presentation as well, with all the tensions going on in the world right now, expect the aspect in terms of oil to be uncertain for a while and potentially, really, when we think about it, potentially rise if the tensions get worse under the circumstances. And especially now we take a look at the lagging indicator, it is smack bang right on those volume profile areas as well and could potentially go back upwards from here at this stage too. How's USO looking? Well, in terms of USO, we are exactly right in the middle of the two VWAPs, the yearly VWAP being the green line and the pink quarterly VWAP as well, right in the middle. Indecisive at this stage. So let's wait and see exactly what happens. And you can see right here as well too from the Ichimoku curve, the lagging indicator is underneath the baseline, but it's above the Tenkan Sen. And there's a big wide distance between the two of them. And on top of that as well, in terms of the direct right now point of view, Tenkan Sen and the baseline are neck and neck. They're right in between. They're right on the top of each other at this stage. So really, it is completely indecisive as to which direction it's going to go. So it's a wait and see moment at this moment, and it's stuck in the cloud at this stage as well. So there really is no direction at this point. It's completely neutral. So there is so much going on right now that it can be very, very hard to determine exactly what's going on in terms of, say, the war circumstances, and that's fair enough. We really don't know exactly what's going on there. But one thing is definitely for certain. Precious metals are definitely moving. No one can deny that. And that is a big thing for a lot of people who are involved in precious metals. We're still waiting for movement and clarity in relation to cryptos. We're still waiting for clarity and movement in relation to Brent crude. In terms of equities, could we be having a pullback? Yes, we could. Could we still keep moving forward as well? Absolutely. But sooner or later, things are going to cool down as well in relation to that too. So it really does come down to keeping an eye on your individual risk. Absolutely. Things have not changed there in terms of any form of potential recommendations overall. We can't obviously give advice in terms of anything there, but the charts are really suggesting to keep an eye on your positions and really keep an eye in terms of what's going on overall with everything that's happening there. And we didn't go through the sectors individually this time round overall. We should do that next week in terms of taking a look at all of that. Once we get a little bit more clarity overall in relation to what's going on with the indices, let's definitely do that. But until then, let's see how things go midweek, and then we'll take a look at everything like that again as well too next weekend. I'll leave it across to Yash to conclude everything for this particular week, and we'll see you again on Wednesday.
Thanks for that, Steve. So, as many of the points that we made start of the week, it doesn't look like this war is going anywhere. In fact, it's gotten a little bit more heated. With things such as copper versus gold losing strength because gold's increasing in value, that's definitely something to look out for. But at the same time, risk assets such as Russell have coiled up higher as well. What this means for Bitcoin after Clarity Act being delayed but having some progression is going to be very interesting to watch over the coming days. So with that, stay tuned in with us. Drop us a like if you have made it till now, and it goes a real long way for us to continue making this content. If there's anything we could do differently or anything you would like us to cover, drop us a comment. We really do go through them. And with that being said, for today's word, let's go with
shiny gold.
Let's go with shiny gold as our word for today. So shiny gold, put that in the comments. I would love to see who is engaged, and we'll give you a shout out on next video. But thank you, Mark, for your ongoing support. We truly appreciate you. And with that being said, if you are enjoying the journey, to subscribe and come along the way with us. Thank you so much, everyone. We will see you on the next video.
Thank you very much, everyone. We'll see you on Wednesday for sure. Bye for now.